Hello everyone and welcome to my daily report market analysis videos with me, which is market analyst at Hantec on Wednesday 21st of August. There is a relatively settled look for markets today, nothing too significant in terms of direction, a little bit of equity strength coming through as treasury yields have started to just rebound a little bit, but to be honest they're still within their consolidation areas, and it's actually indicative of what we've seen in forex majors in recent days. You've actually seen euro just hovering around 111 big figure, still looking for direction. You've seen sterling hovering above sort of between 21 figure, 22 figure, and also dollar yen underneath 106.75. It's interesting that we've seen gold just dropping back under 1,500 bucks today. That is also still in a consolidation zone, and I'll talk you through the technical implications of all these moves later on, but it is interesting that we've seen that. Now, you saw a downside move on the S&P 500 last night. That's been countered by a little bit of a rebound on futures. S&P 500 negative by 0.8%, but that's rebounded about 0.6%. So what you are seeing is a little bit of a gain on European markets as those futures have pulled higher this morning, but Asian markets overnight were basically mixed and not really showing too much direction in that. But it is interesting that we've seen that equity markets rebound as treasury yields have picked up. Now, there has been, well, to be honest, the market's looking forward to this this Fed meeting minutes announcement today at 7 o'clock this evening, and that is going to be the first real thing that the market's going to be looking out for. What sort of hints are the Fed going to be putting out as the markets look forward towards further rate cuts? How many or how dovish is the Fed going to put out its positioning? Will be the key today. There's a bit of interesting Brexit development. You've got Boris Johnson in Berlin speaking to Angela Merkel, and she's saying that a practical solution needs to be found on the Irish backstop. So that's interesting. Maybe some development there surrounding the prospect of some sort of agreement. But yeah, it depends on how the sort of relatively hard-lined outlook for Brexit is given by Boris Johnson, the UK Prime Minister. Okay, so what about data points today? Well, we've got a little bit of UK data early on today. Let me get that going. Is the UK public sector borrowing? Oh dear, that's under expectations there for the there's a bit of a surplus this month and it's missed estimates, so that's not going to help sterling all that much. And then looking further out, we've got the US existing home sales as the main data point this afternoon, although a bit of Canadian inflation at 1:30, but the US existing home sales expected to be improving slightly to 539 million, so housing picking up there on existing home sales. And then we're looking at the crude stocks. Now, the EIA inventories are expected to show a drawdown of 1.9 million barrels. Now, the API inventory was larger than expected drawdown yesterday. That helped to support the oil price, so it'll be interesting to see how the markets respond to what could well be a surprise bigger drawdown on the EIA inventories as well. And that's later on this evening. Then we've got the FOMC meeting minutes. Now, my chart of the day is Aussie Kiwi. Now, I spoke about this in my webinar yesterday, when you can see this building and developing trend higher, where the Aussie consistently is now outperforming the Kiwi. Having consistently underperformed for several months, that performance has decisively turned a corner. Look at the momentum indicators. 60 consistently was a point at which the market fell over. Now, markets in around 65 on the RSI. You've got the MACD lines, which are accelerating decisively higher. Stochastic strongly configured. That is certainly looking to buy into weakness. A breakout through resistance of the 61.8% fib level. That was basically an old rally high, 105.50, and certainly is obviously coincides with 61.8% fib of the corrective move. So breaking out through that becomes a basis of support, and that opens 76.4 at 106.20. So that's the next line of resistance area, and that coincides with the May high, 106.30. So it certainly looks as though the market is on course towards a test of that May high, and beyond that, you're looking for the full retracement back towards 107.30. So this is certainly a very quick recovery that we've seen in the Aussie, and it is gathering pace, and you've got a strongly solid bull candle developing today. So that outperformance of Aussie versus Kiwi continues. Sorry, that's AUD and ZD equals. That continues to show through a run of higher lows on the daily chart and the hourly chart. 105.35, 105.50 was yesterday's low, before turning around again today. So it really does look as though this one is on the move higher. So we continue to certainly we now are looking for the outperformance of Aussie versus the Kiwi to continue. So with that in mind, I wish you good luck in your trading. Click here to subscribe to our YouTube videos, and also go to our website where you can join up for our trading webinars. Thank you.